All right, guys, I just wanted to record a fourth update to the Bitcoin live trade series. And real quickly, I'll show this account. It's a trading view paper trading account. The account balance is 2.5 million, roughly. And the initial trade to start off the account that we opened it up right here. And price came down to this level. And we took a little bit of profit along the way. Ultimately, did manage to take some profit up here. Um, Not as much as I would have liked, of course. Ultimately, ended up getting stopped out with about 30% risk on the table, um, but still stopped out in profit. So I'll take it. I didn't get this. So now we have this bearish breaker here. Price ran out, ran a liquidity up here, came down, hit these lows. This is your shift in market structure. That's where I got stopped out on this long position, and that's where I would like to, you know, now I'm looking to play the other side of the market. I didn't get this short here. I just wasn't available to take that trade. But now that we have to interact with the market from where it is at the current moment. So with that in mind, I would be using this high as the invalidation for a short-term short idea. And we'll do a little bit of a bearish retracement. This just gives a context of like the short-term frame that we're operating within. So I would be looking ideally for some type of short position up in here. Um, I like this level. If we go down to the lower time frame, we'll see. Here you have this impulsive move starting at 43,500 roughly on Coinbase. And if you were to map out the golden pocket on this fib, it would be right around the same area. So that's a nice confluence right there, and that's probably the area I would take. So let's pull this off the chart and set up our short position. We got our short right here, validation over there. Now, the ultimate trade idea would be based off of this swing. So we broke market structure here, roughly. Volatility picked up a little bit. This is typically where people get their ass kicked in the market if they're zeroing in on the market. But we did break. So we did break market structure, came up, ran the highs again, came down, but ultimately it's this level we're looking at. And now that that's broken, we sort of, our attention drifts downward to these gaps in price action down here. This is really a great opportunity to be short, or I'm sorry, to actually close a short position or enter a long. That's a little bit far away from where price is right now. I mean, we're sitting on support, so we always got to be cognizant of this right here because you know it may be represented by this level or this level, but the idea is that price can always come down to this level, and that's the low. And then it just continues on. So if we do take a short on this, we do want to be a little quick to take profits, initial take profits. So I may take 3 initial take profits within this very small range, let the other 2 ride. But anyway, I would be looking for an entry right up here in this region. So actually 43,500 exactly is where I would set my limit. I don't necessarily need to be available at the time. I can just set a limit there and a stop market up here. My first take profit level would be this level. I mean, again, it's not perfect, but there's this level here. Obviously, acts as support. Roughly is resistance. Bodies of the candles. So if we can represent it like this. So I would set my first take profit at 42,822. And then likely what we see if this ends up breaking up, this area right here, see this narrowing range right here, this probably ends up being a similar impulsive move up here. This is, I'm getting a little bit ahead of myself because that hasn't happened yet. But if price were to run up here, at some point you would need to put in this type of area of impulsive move. I would mark that area off. I'm just saying hypothetically, maybe it's right here. Maybe the second take profit would be right here. And ultimately, the third take profit would be just below these levels right here. And the reason being is because we have this, again, we have this support right here. So if price does base at this level and ultimately continue, then I want to book profit on that short. Now, of course, I will leave 40% of risk on the table, assuming that this gap gets filled down here, with the ultimate intention of flipping along right around this point. Now, this level is very significant. We'll just take everything off the chart. So you have your downtrend with really no relief rallies. I mean, maybe you could consider this a relief rally, but it gets shut down very, very quickly. As you can see, price doesn't really even test resistances on this way down. Until this region, right? You have this, it looks like trending behavior down here. Now, remember, we're in the context of a higher time frame level, so it's not really a huge shock that price came down here to this high time frame level, and then you have the lower time frames colliding with the higher time frames, and the higher time frames win. But the key level to look at is this level right here, right? In this point, this was starting to look like a continuation of a downtrend. You have just this clear pattern of price behavior, kind of motivated by the Fed speak and the Fed's different threats as it relates to interest rates. And it looks like it started to look like it was price was setting in a lower high until obviously we get this move. And this area is really important. This is the area of disbelief or complacency in the market. Regardless of where you're short, this is where the smart short sellers and smart bears were managing their risk, regardless of where they shorted from. Even it doesn't matter. Once this high starts getting broken, price starts setting higher highs. Smart bears were closing their positions there, and of course, people who didn't manage risk, right? Price runs up right above these highs, maybe stops them out over there, or maybe they're just adding margin. Who knows? But this is a really cool level because, and this is how symmetrical the market is. You have price comes up to roughly these levels, sells off. There's your break of structure. Now, just as this was the ideal area to manage risk on the trade, if you were short, and on the flip side of that, it's also the ideal area to add risk if you're looking to enter a long position. So it's the symmetrical nature of the market right there. An interesting concept that tends to play out across all time frames. When you can catch them playing out on multiple time frames at the same time, it's really an ideal scenario. All right, so let's go back to our medium time frame. So ultimately, I do have a bullish bias, and I'm looking to get long here, but I'm just playing the short-term moves just as an exercise, just to make the case that I don't need to be in a long position all the time. Anyway, so we have our level here, have our risk management area here. Setting the orders.